Good afternoon, everyone. Today is Friday, December 16th, 2011. This is Brian Shannon from Alphatrends. Let's take a look at this market here. We'll pull up the table first, and this week we saw the S&P 500 lose 3.5%, basically matching where we are year to date. And NASDAQ lost close to 4%. Semiconductors were the really big loser here, 5.6%. And that's something that we had been observing before, that the semiconductors were kind of giving us reason to think that maybe this market would become a little bit weaker. Anyways, let's take a look at this. What we had, of course, a couple weeks ago was it was looking like the end of the world on a Friday afternoon as the market closed right on the lows, and then we had that big move higher into the 200-day moving average. Well, that 200-day moving average had acted as resistance, and we're pulling back this big rally right now. Still, that is, we're pulling back from it. We've been observing the Fibonacci levels. In fact, if we take a look at and draw those in here, the retracement levels. For those that aren't fully familiar with Fibonacci, this would be a 38%, 50% just down to the next line, and then a 61.8% retracement of that move. Basically, when it goes more than 61.8%, it's considered a failure. We're not there yet, but you can see we've been kind of hanging along this 50% line, and we are still showing this pattern of lower highs and lower lows below a declining 5-day moving average. Now, today we had once again a pretty spirited rally for a little bit in there, but then as the market broke back below not only the pivot and the 2-day volume weighted average price, but today's volume weighted average price as well, that's where it really became unglued here, and that's where, even though we finished positive for the day, up 19 pennies on the S&P 500, it's still not bullish action, and you can see we're still, I mean, it kind of looks like we're just hanging on the edge of this cliff in here. So if we continue to see weakness, I think that some of the levels we want to keep an eye on are prior levels of resistance that could potentially act as support, and then we kind of go down and look for these next levels. But right now, there's no reason to think that it's going to turn around still. We're getting a little bit oversold, arguably, but with lower highs and lower lows, that's not the time you want to be expecting a turnaround. We're going to have to get, I think, at least above 123. 123 has been a pretty substantial level for this market in the near term. 123, 123 and a half. As long as we remain below that, I think we still have to stick to the mantra that the market's guilty till proven innocent. The Nasdaq was up 12 pennies on the day, but again, it was down. What were we talking about for the week? For the week, we were down 3.7%, and obviously the big level that gave way in here this week was that 56 level. We had been closely observing that level for good reason, because we've fought some pretty good battles, or there have been some pretty good battles being fought in that 56 level here over the last couple weeks. And when we frame this in terms of the Fibonacci from this recent move from there to there, what we want to do is get my trend tool here and take a look at this. And you can see we're hanging right on that 61.8% retracement, and it just doesn't look good. You don't want to see the market spending all this time down here. The more time support is tested, the more likely it is to fail. And you can see this was a prior level of resistance in here as well. So in addition to the 61.8% retracement, it has been a significant level. I think below 54.50, then that is $54.50, that this market, the NASDAQ, could maybe even go down to test these lows. So still have to be very cautious in here. We've got a trend line that maybe could offer some potential support. That would be closer to 53 and a half ish. So let's take it one piece at a time. 53 and a half, then down towards these lows. But it's just not behaving well. In order for this market to get back into a fairly healthy position where we can have a little bit of comfort on the long side, I think 56 is going to be key. We want to see it get above and hold above 56 next week. Otherwise, down below 54.50, we could see further trouble. And by the way, next week is the week before Christmas, and I guess we have a full week of trading. It'll be the day after Christmas that it's closed, but a lot of people won't be here, I suspect, next week, and that'll make volume lighter, obviously. But if you're taking that time off, enjoy yourself. The market is in a tough position. The Russell 2000, what was the percentage loss this week? Down 3% as well. And excuse me, you can see we've lost a pretty important level in here, near about that 72.5 to 73 level. We were briefly above it today for a little while, and it was starting to look like, well, maybe the Russell could pull back, hold above that 5-day moving average, and then somehow turn around. Well, obviously that wasn't meant to be. We still have these lower highs and lower lows. We're getting a little bit of a correction from that sell-off, but still just not a healthy looking market. The Fibonacci in here, we have bounced a little from the 50% retracement, but again, it's just you can't look at this and see and make a strong case for bullishness. We're holding above the 50-day moving average, but that's really not much to hang your hat on. As we noted, last week, it was a 150-day moving average that's been holding as resistance in here. Semiconductors, as we said, down, I think, what was it, 6% for the week, 5.67%. These guys failed at their 150-day moving average as well. We've got this little trend line that you can draw that it's trying to stick on, and the bigger level in here was that 30.5 level. We lost that obviously earlier in the week and stayed below it. So after that one weird move higher, but 30.5 had been a pretty important level for a while, and we're still, best case you could make is we're trying to find some support in here. But the way that rally went first thing in the morning and then gave it all back during the day, that's just not the bullishness that you want to see. Semiconductors back below 29, then we could see further deterioration here, perhaps down to 28. The financials had a rough week, obviously, as well. Their percentage basis loss was right here, 4.27%, and it's just looking ugly. That $12.80 level that we'd spent quite a bit of time focused on as support has acted as resistance, and that's basically the hallmark of a downtrend. Is prior support levels will act as resistance, and we've got this market in a downtrend. The retracement that we've seen so far in here has been about contained to 50%. 1240-ish would get it down to that 61.8, but you look at the daily chart, there's nothing really here to be bullish about. We're trading within this triangle, I guess you could say, but maybe it appears as though we should be headed for a test back down towards the 12 level. I've said it before, and in fact I said it 3 weeks ago on this day right here. I said it's very difficult to see what's going to turn this market around, but this is exactly why we have to keep an open mind and listen to the message of the market as it gives us new pieces of information. But generally, again, while we're below a declining 5-day moving average, this market remains guilty till proven innocent, and it's going to make it very tough going on the long side.